This week has been a hugely busy and varied week for news flow. We've had a Dutch election, we've had a call for a Scottish referendum and a rebuttal from the UK government. We've had 2 interest rate decisions, and we've had a lot of corporate news flow. We're going to pick out 3 specific bits of news this week that we want to focus on. We're going to look at the results for the week ahead and a couple of angles on 2 of the Killik stocks. So, first key point for us this week was the Fed didn't raise rates more aggressively in terms of their dot plot. We didn't get an acceleration in the expectations of outer years in terms of rate rises. That was a surprise because we've actually seen financial conditions loosen in the States since December. And that's because the trade-weighted dollar has fallen, and we've also had bond yields falling at the same time as S&P 500 has risen. So actually we've seen a 50 basis point loosening of financial conditions despite this interest rate rise that we've seen, which is obviously good for equity markets, but potentially we could start to worry about overheating. The other key issue for us, the second key issue, has been the OPEC monthly oil report, where we saw quite a significant increase in production from OPEC versus January. We also had the Saudi minister saying that the shale producers would not get a free ride, and therefore markets were getting slightly more concerned about OPEC keeping to their production cuts that were announced earlier in the year, and that's why we've seen the oil price fall earlier in the week. Third key thing for us was a very robust set of numbers from Barclays Group this morning, where they pointed to very good demand in London homes. And as you can see here, London prices have remained very robust and continue to trade at a premium in terms of that differential to nationwide. There were concerns that London was starting to fall more aggressively than nationwide prices. So looking at the week ahead, the key results for us will be Nike on Tuesday and Accenture on Thursday. Just thinking about Nike briefly, we have seen an underperformance in consumer discretionary, largely because of a rotation out of those names into more cyclical names that would benefit more from Trump's policy, and also because of the oil price rise. At the same time, we are seeing a better consumer, and this chart shows consumer confidence has really been picking up this year, so hopefully we'll start to see that coming through in their numbers. In Accenture, we continue to watch that transition of the business in the way that it is facilitating the digital economy. Accenture's digital business accounts for $9.5 billion of their revenue, and it's doubled in the last 3 years. So digital, cloud and security is now 40% of the revenue and growing very quickly. So for us, that continues to be an attractive stock on 20 times earnings. That's it from me. Thanks very much.